In this video, I'm going to break down my entire trading strategy. I will show you how it works. I will show you why it works, why it's pretty similar to golf actually, and how you can copy and paste the strategy quite quickly if you understand it, because what you understand, you know, and what you know, you don't forget, and then you can use it to your own advantage. So let's get right into it, shall we? So as you know, if you've been or if you are familiar with trading already, this is a chart, right? And the chart obviously lets you know the price of, for example, here, the NASDAQ, which is the instrument that I am trading. Okay, so my entire trading strategy is very simple, very, very simple. And the way I look at it is through golf. Okay, so when you play golf, you have 18 holes. Okay, every single hole represents a different trading day. Okay, because on some days you have these kinds of requirements, so meaning you start here and you need to get the ball all the way to the hole somewhere here. And on other days, well, the course or the day looks quite different. So maybe it's just a straight hole, okay? And you go from here all the way to there. But the goal is always pretty similar. In trading, you want to make money. In golf, you want to get the ball from where you're starting off to the hole in as little shots as possible. Okay, so let's take a look. At golf, if you play golf, you have a couple of different clubs, right? You have, for example, the driver, and then the most common ones, to be fair, are the irons, and you have a putter, which is not on the screen right now, but it's just the one that you use to get the ball into the hole with. Okay, so what you do usually is you start off with a driver. Let's say you are on hole number 5, and you start off with a driver, okay? So you want to get the ball from all the way down here, as far as possible, close to the hole. Now the goal is to get it far and somewhere at least inside this range. You don't really care if you are 2 yards this way or 10 yards that way. It doesn't really matter as long as you make some distance and the ball actually just travels a long way, so you get closer to the hole. So the goal with the driver is to get you as close to the hole as possible. All right. Now in trading, I use something called the volume profile. Okay, so the volume profile is my driver. It lets me know the direction I want to trade in today. To give you an example, let's take a look at today. On the left hand side here, this is my volume profile. And my volume profile tells me, hey, which direction do I want to trade today? So am I looking for longs? Am I looking for shorts? Or am I looking for both? Okay, that is my volume profile. So today, for example, I can see we have low volume nodes here and high volume nodes here. The difference is obviously how high these nodes go here. Here, these are high, these are high, these are kind of high, and these are very low, obviously. Okay, now what I can see is the following. Through the volume profile, I can see price acceptance and price rejection levels. So what happened here today? It's actually very similar. We started off trading here in the morning and we accepted those prices, right? We accepted those prices because we know we traded in the range. And if we actually take a look at how the volume profile looked at that specific time, you can see that we had a D-shape volume profile, all right? It's a D-shape volume profile, like the letter D, all right? What does it mean? Well, it means that these prices here, they are being accepted, okay? So there's no clear advantage either to the long or to the short side. So what do? Well, we either go short here or we go long here at rejected prices, okay? I will show you exactly what my putter is so I can find extremely precise entries but also exits, but more on that in just a second. For now, I just know at this time, early in the mornings, it's 4:50 US time. I know at that specific time, okay, I want to trade short here and long here. All right. Now, as the time went on, I can go back to the current time. Let me just delete all these drawings here. There we go. Oops, that was not what I wanted. There we go. Deleting all of it. I'm sorry, I'll just leave it in here. As the time went on, we can see that now we rushed through this level and we are now accepting again. We are accepting lower prices. How do we know that we are accepting lower prices now? Well, because we see that there's a lot of volume being printed. What is volume, by the way? Volume is nothing else than contracts being traded at any given price level. Okay, so this is volume over time, and this is volume over a specific price level. So if we switch over to, for example, a footprint chart, I need to get myself out of the way here. It's a bit annoying. There we go. Perfect. So this is a footprint chart, and the footprint chart basically tells us, hey, at any given price, and you have to zoom in quite a bit, you can see here, at any given price, for example, we had in total 19 contracts being traded at this specific level in that minute. In this minute, we had 23 contracts. And then you can see all these contracts that were being traded at this one specific price at 23,307.75. Okay, now if we zoom out again, all of these contracts combined, they make up this volume profile here on the left-hand side. Volume over price. How many contracts are being traded over or at a specific price level. Now that we know that, we can go back to candles for now. And we can now understand, okay, the market has one specific goal. And the goal of the market is to transact as many contracts as possible. And the market can only transact as many contracts as possible where prices are being accepted. So now that we know that at first we accepted those prices here, the market broke through those lows, and now we accept prices down here. What does it mean? It means lower prices are being accepted. That is my driver. Okay, I now know I only want to look for short entries. I only want to sell. I do not want to buy down here, most likely. I also don't want to buy down here, most likely. What I want to do is I want to short here and I want to short here. All right, very, very important. Okay, now the question is, why wouldn't I go short here? I mean, we are short, right? Why wouldn't I trade this trade? And we'll get into that in just a second, because that's what we need the putter for. For now, we know, okay, the volume profile dictates, our driver dictates, we only want to trade short. Now the question is, where? Where do we want to look for entries? And that, my friends, going back to the golf map, is my iron. So the iron, if we go to the clubs here, is this one. Meaning we are somewhere maybe here. Okay, and now I want to be a bit more precise compared to my driver. I want to be a bit more precise, and I want to make sure that the ball actually lands on the green, so I can just put it in with a very high precise shot using my putter. Okay, so the driver is very unprecise. The iron is a bit more precise. And if we look at that in terms of trading, those are my price levels. Okay, so you can check out all of my videos. Magically, for some reason, my price levels are always quite accurate. For some reason. And like I said, check out my channel. You'll see that my price levels are very accurate. Meaning, for some reason, I am able to kind of see into the future and predict that here, somewhere at this price level, the market will turn around. And for some reason here, the market will turn around again into the short direction. Those are my price levels. The way I find those is using the volume profile again. Okay, I will make a full video on that on another day. But the way I find these price levels is actually using the volume profile and high volume nodes of other previous trading days. Okay, we'll get into that in more detail in another video. But for now, just know that my iron, where I'm looking for entries but also exits, are my price levels. Okay, now that I know, okay, I know which direction I want to trade in. For example, today I only want to trade shorts. I now know where I want to look for entries. The only question is, should I now get in once price has reached a certain price level, or should I stay out? Okay, and if we go back to golfing, that is, you are now already on the green. You're on the green and you want to be as precise as possible to get the ball into the hole using your putter, okay? You are very precise. You don't get far with your putter, but you get very close. You get very precise entries when it comes to trading. And For that, we use a specific software, and that software is called Bookmap. Now, this looks very confusing at first, I promise you that. However, it'll be very, very easy to read once you understand exactly what is going on. Just to give you a rough overview, this is nothing else than a basic visualization of the charts. So what you see here is exactly what you see here, just in a different way. All right. So today, for example, it was very easy to read. It was very easy to read. We knew, okay, we only want to trade shorts, right? So what happened at those price levels? We can take a look. Let's take a look actually. And I will give you exactly my full breakdown of today's trades because it was super simple to read. Okay, you can see here that I had a very good entry. I had actually a couple good entries. So for example, here at this level, that was at 750. I had entries to the short direction, okay? And here I had another one. And we can break them all down, but for example, let's take a look at this level right here. 751, purple color here, just as you guys, so you guys can see. Purple is short, meaning I am selling. I want to bet that the market is going short, all right? So at 750, let me take a look at what happened at that specific price. It was right here, all right? 750. Let's take a look. I'll go back. There we go. 750. This is 749. And for now, I don't see that much. Right now, I can only see that before this was a level of rejection. So the market rejected here. Why do I now want to go short? Well, let's take a look. Because if we actually now go ahead, and let me just move this a little bit. There we go. If we now go ahead and we fast forward one more bar, so one more minute, okay, we see something very interesting happening. And that is, for some reason, high volume coming in at this exact price level. High volume coming in. And I saw that in real time. I saw that here at this specific level. Here, there was a bunch of volume coming in, a bunch of trading coming in at one specific price. And if you go a little bit closer, you see here all of this buying. You see all of this buying, right? And usually the market works in a very simple way. If there's a bunch of buying, a bunch of demand, the market should go up, the price should go up. However, if for some reason there's a lot of buying, yet the market doesn't go up, the price doesn't move up, that's an abnormality in the market. And that means, let's put it all together, it's like a puzzle. We know we are short. We know we're at our price level, meaning a level of interest. Now we see, hey, there's a lot of buying, but the price doesn't go higher. And there's a lot of volume being printed. 4 confluences that now is a good time to enter my trade. 1, 2, 3, I entered my trade, another one here, boop, boop, boop. And there you can see all the way until here, I held my trade. It doesn't look like a big trade for now, but let's actually move a bit closer. You can see here, this was roughly my average here. So at the 80, so 23 to 80 was my entry level roughly. And then you can see here, I exited at the 66 level. That's 15 points. 15 times 4, because we have 4 ticks per point. That is 60 ticks. All right, guys, 60 ticks. And every tick is worth $5 per contract that you trade. And if you trade with 3 contracts, well, you can do the math already. Then I went in once more actually here because I realized, look at this, guys. Look at this. It was picture perfect. The market went downwards. Okay, we had a consolidation. What is consolidation? It's basically just the market collecting some volume again. And then here I could see a bunch of buying coming in again. But somehow the buying got less and less and less. And then buying turned into selling. Okay, but once I saw that the buying got less and here there was pretty much no interest in trading anymore, it's just the market was just exhausted. Then I went in for a short trade once more, and boop, I went I went to the trade. I held it all the way to the 50 level, and you can see here entry at 23 to 70, exit at 23 to 50. So that's another 80 ticks and profits. 80 ticks, guys, and that is it. That is my entire trading strategy. I go from broad to very narrow, and obviously every single component has its own components. It's You need to understand the full picture, obviously, but once you click on my channel, you see a couple of other videos, obviously, breaking down every single component of my strategy, meaning I go into the order flow, book map, I go into the volume profile, I go into the price level, so you know exactly how each and every single one of these components work. But for now, as long as you know that trading is kind of like golfing and you go from broad to narrow, then you understand trading in a completely different way. And for some reason, guys, once you understand how this works, trading doesn't have to be complicated anymore, guys. Trading can be easy. Well, to be fair, trading is simple, but not easy because you need to control your emotions. But these price levels here and the volume profile, they're so magic in and of itself. You don't even need the volume, the order flow, meaning book map, in order to trade those. It's just very precise, meaning you can get in with very small stops, but very large take profit. So your risk reward is always, it's just always in your favor most of the time, usually. No guarantees, no promises whatsoever. But once you understand this, guys, trading can become effortless. I hope this is very understandable for you guys. I hope I made this very easy to understand, very clear to understand. If you have any questions about this, let me know in the comments down below. I trade live. Usually I record my tradings. I show my wins, I show my losses. Check out my channel, guys. There's a bunch of gold for you guys. If you're new to trading, check it out. If you're a bit of an experienced trader, but you somehow couldn't get profitable yet, but you know that trading is one of the most amazing business models ever, then check it out as well, because you will find some gold on there that you simply won't find anywhere else. All right, guys. Without further ado, the market is about to open up in 45 minutes. I'm going to take a quick break now, and then I will trade, hopefully, if the market actually gives me some trades. And without further ado, I'll see you guys in the next video. And until then, I wish you a great day, and I will see you soon. Bye-bye.